Good morning. Welcome. It's that time of the week. This is the high probability short-term credit spread show. Unfortunately, Brandon can't make it today. He's on assignment. So we got a really big show for today. I'm looking at two particular stocks that I think are really good sniper candidates. And we're going to cover what the market did. The Fed was in front of Congress yesterday. We'll look at the quick markets, a quick market overview. We'll look at last week's trade, which was on Okta. That was a 26-minute trade. We're going to take a look at the results of that. I've got a couple of trades I want to fish for this morning, snipe for this morning. I'm going to show you my sniper guidebook free giveaway. We'll talk about that a little bit. And then if you have any stocks that you'd like for me to consider, please pop them in the chat box down below, and I'll consider those right at the end of this 30-minute session. So we've really been doing very well in our show. The last I think it was the last 3 or 4 trades we were in and out within an hour, and that trend has continued. Let's talk about the markets first, though. This is the chart of the S&P 500. All right, what you can see here is a very, very clear trend. I can use tools in this beautiful hub software I like, and what I'm going to do here is show you. Well, let's start the trend right here at the bottom here. I mean, you don't need me or anybody else to tell you that we're in this beautiful bullish trend on the S&P 500. All right, so we've had some pullbacks, which is normal, but this is a beautiful, healthy trend intermixed with some pullbacks. We're reaching new highs. That high right there below my crosshairs was an all-time high close on the S&P 500. We're well above 5,000. That trend is continuing. Bullish, I'm bullish. Now, the Fed was in front of Congress yesterday, and we have a little graphic here I want to show you. You know, the Fed was like, it's kind of like, kids in a car. Are we there yet? Are we there yet? Are we there yet? It's like traders are going to the Fed. Are we going to get a rate cut yet? Are we going to get a rate cut yet? Are we going to get a rate cut yet? And the Fed said, hold your horses, hold on. It's going to happen, but we don't know exactly when. Most likely, it'll happen towards the end of the year, maybe the second half of the year, but the Fed just doesn't know yet. The market shook it off. And right now, as I speak, the Dow futures are up 0.27%. The S&P 500 futures up 0.43%. The Nasdaq, and the Nasdaq's up 0.459%. So the markets are in a definite healthy bullish trend. We do have the jobs numbers coming out Friday morning, which could move the market, spook the market. It's very skittish. The traders are pining for interest rate cuts, and the jobs number is really important for the Fed. So the markets will be watching that report on Friday morning. So, we may get a change in direction, but, it's the same story over and over again. Bullishness seems to be where we're going next, unless we don't. There's always a chance of a pullback, but I just don't see it in the tea leaves. So let's go to our trade from last week. This was on Okta. Let me pull up a chart on Okta so you can see this really quickly. Okta came out with some really powerful earnings. So they came out, and this is the day that we were together last week. And you can see here, before market, Okta was trading at 87, and then gapped way, way up, well above 105. And we sniped from a distance. We actually sold a 91 credit spread, a put spread that would make money anywhere above 91 with blowout earnings, with lifted future guidance. It was almost like, where's the camera? How can you give me money for this trade? And this is what we did. We sold the 91 put and bought the underlying put there. That is a credit spread. It's a little bit, it's not novice by any stretch, but it's slightly advanced. It takes a little bit to learn, which is why I have this guidebook that I'll talk about in a few minutes that you can get for free. So here's how it panned out. And we sold the 91.90 put in the morning, like at 5 minutes after the open. We sold it for 10 cents. We did it 5 times, pulling in $50 with a max risk of $450. Now, our rules say that once you're in, you put a profit stop, a GTC, good till cancel profit stop, to buy back the spread for 10% of what you sold it for. And if you take a look at this graphic that Ryan's going to show you, you can see here that we placed the trade at it says 8:35, but that is actually, I'm in Central Time. So 9:35 Eastern, and we sold it for 10 cents and bought it back at 10:01 Eastern Time. So that's 26 minutes. In 26 minutes, we nabbed a 10% profit. All the while, so far away from getting hurt. The stock moved during the day. And as it ran up here to this 112 mark, we pulled it off for 10 cents automatically and then on to the next trade. This is sniping. Now, I do have this guidebook that I'll talk about really quickly here before I go into the trade for today. There's a couple of trades for today I like. And again, if you have stocks you're looking at, please pop them in the chat box and Ryan will tell me what they are and we can take a look at your stocks as well. So this guidebook is something that I put together to help you manage what I do every Thursday. You know, it's pretty fast. The market's open in 8 minutes. Think I'm talking fast now? Wait till we get into the live trading environment. I'll keep it as slow as possible. But, you know, it's a pretty fast game in the morning. But once you learn it, you can start sniping these profits. You know, our historic win rate is 90%. 90% of the time we win. And our average profit with losers considered, historically speaking, is about 11%, 10 to 11%. And we gather that 10 to 11% with an average hold time of 7 days. So that's what the system does. If that's interesting to you, get this guidebook. It'll walk you through every single step that I'm going to do right here before your eyes in just a few minutes. It's free and it'll help you come and join me on Thursdays and actually do these trades alongside me. So please get the guide. It's free. Just go down below. You'll see a link for it and grab it, download it, and check it out. Okay, so the stock that I'm interested in this morning, there's two of them, but the one that I'm going to go for, I think in the beginning, no, we will for sure. In the beginning is this company called Victoria's Secret. All right, you've probably heard of them if you're in the States. They make women's apparel, exotic apparel, let's say. And they came out, and it's a little. This one has a little bit of a twist to it. So they came out and said their results were in line with analyst expectations, but they lowered their future guidance by 3.2%. All right, so you can see the stock was in a choppy range. The stock currently is set to open right about down here at 18. Now I can see what that looks like by using the Hub software here. I'm going to show you a 5-minute bar, and the 5-minute bar shows you what the stock did pre-market last night and then the market this morning. Let's see where it was before the announcement. Okay, so this is how it works. Victoria's Secret was trading around 25 and then started running up into the earnings announcement. The earnings announcement happened. Hey, our future guidance is going to be lowered by 3.2%. Hey, that's too much. Traders dumped the stock all the way down from, let's call it 25, 26, all the way down by the close of the post-market, 1885. It opened this morning pre-market, just lower than that. Currently, it's trading around 1872 or so. So now the question becomes, the news is somewhat mixed, right? So they met their expectations, they met earnings, so they did as well as everybody expected, and then they lowered their future guidance. So let's go back to a normal chart here, a one-day chart. And so now the question becomes, where do we draw our line in the sand? Our line in the sand is nothing more than in this case, a resistance level. All right, so the stock's here last night. It's going to open up down here this morning below this blue line, which is the 200-day moving average. I love them when they go like this, because if the stock's at 18, for it to get back up to this 24 level, which we'll talk about more in a minute, the stock's going to have to break back up above 20. Look over here, 20 resistance, 20 resistance, 20 resistance, 20 support. That is a major resistance level. I call them lines in the sand, but they're really support resistance levels. You'd have to get above 20. above the 200, above this level here, which is 23, and then it gets to 24. Now, I would go as low as the 200-day average, let's say 22 on this one. But given that the news is mixed, we met earnings expectation for the past, and we're lowering future guidance. So if they had missed their earnings and lowered future guidance, then I would come in closer. So what I'm expecting is, it's a distinct possibility, is that the stock will find support around 18 and then make a run back up. For it to get above the 200 is going to be really hard for it, but it's possible, particularly when I looked at what the institutions were saying about Victoria's Secret. Let me show you this. So this is all about probability, really maximizing probability. So JP Morgan downgraded Victoria's Secret to underweight. What's that mean? Underweight is like soft sell. Start dumping the stock. Underweight it. Reduce your exposure to Victoria's Secret. And they lowered the price target from 22 down to 15. Now that's what, that's JP Morgan. And then BMO Capital did something else. They maintained an outperform as well as lowering the price target. So we got mixed news from the analysts. We've got mixed news from the earnings. And so here's my strategy. What I want to do here is, there's an adage in trading that I really like. Let the trade come to you. All right. So my line in the sand that I want is 24. Now I might miss this trade, but I want to account for any kind of bounce that might happen given that they actually met their earnings for the last quarter. So I'm going to put this on and I'm going to price it at a price I want, and I'm either going to get filled or I'm not. We've got 2 minutes before the market opens. So let me show you what I'm going to do here, right in a simulated Thinkorswim environment. All right, I'm using Thinkorswim simulated. I'm not taking this trade. If I put a trade out for the public, I don't take it. It's not, we're not allowed to do that in the trading world in the United States. So I'm not going to do that. And then I'm going to go to the only expiration that I have on Victoria's Secret that would make sense: 8 days or 43 days. 43 days is too much time. I don't want to be in this trade for 43 days. The stock could bounce. It could happen. I don't want to be there. I want to be in and out, sniping from a safe distance, in quotation marks. All right, so I'm going to go for the March 15s, and I'm going to put this order in. Now, it shows 45 cents, but that was for last night. It's not going to open at 45 cents. It's going to open somewhat lower. So if you want to join me here, simulate this if you like. I'm going to put it in for 20 cents credit. The market opens in about 36 seconds. I'll put it in there. If I could snipe that 20 cents credit right at the open, it's possible. 5 minutes later, probably not, unless the stock were to rise. So there's some things you can do with, predicting price and that sort of thing. Too much for this show, but I'm going to try for 20. Let's put it in. I'm selling the March 15, 24 call, buying the one above. That's 25. That's what I'm to sell the 24, buy the 25 call, put an order in for 20 cents. We're going to fish. We're off. I hit send. I'll come back and review this trade in just a minute. And there it is. So that's the price I want. 45 cents is what it was last night. And when they open the market here, the options market on Victoria's Secret, we'll see what the price they're offering. Now, at the open, when there's this kind of news, when the stock has gotten decimated, taken behind the woodshed and beaten severely, the option traders like me are in there trying to snipe some options on Victoria's Secret, and we may very well get 20 cents. It's possible. It doesn't hurt to ask. I'm going to let it sit there, and then as soon as the option market opens, it's not yet, that price will be updated, and we'll have to wait and see. So there's one I like, and we're going to do another one. We're in the same sector. This is American Eagles Outfitters, they beat their quarterly estimates by a lot. Topped Wall Street expectations for fourth quarter on revenue on Thursday as consumers purchased the apparel's retailers' full price items during the crucial holiday shopping season in the United States. So I like that one as well. Let's do the same thing. You're getting 2 trades today. Do the same thing on American Eagle Outfitters. Here's the stock. Before we go back to American Eagles Outfitters, let's look at Victoria's Secret. We can now see that the stock has opened here. We're 1 minute into the market. It's kind of hanging out. Which way will it go from here? I think it's going to bounce. I do. I think it's going to be a bounce. I think that that they're in line with estimates. They're still forecasting billions of dollars of revenue for 2024. I think we're going to be okay. I think the stock's going to find some support here and then do a bounce. Let me go back and check the price here. Still, they have yet to open up the market. So let's wait on that one. And then we're going to try a new one on American Eagle, as I was saying. Okay, so here's American Eagle. And now this chart is live. This is live data. I really like this hub software. This is live data. The stock has bounced up. Now this is good. The stock's coming down, but the news is better today than it was yesterday. The stock may come down a little bit. It's finding some support at 25. And my line in the sand on this one, I'm going to set at 22. All right, so I'm going to say I want to make money anywhere above 22 on AEO. All right, so let's go back into the software here, the simulated thinkorswim environment. I'll type in AEO. And I've got 2 choices here. I've got March 8th, which is tomorrow. That's not enough time. I've got March 15. That's 8 days. Let's see if we can get an 8-day trade. Why not? So again, my line in the sand is 22. And so I'm going to go ahead and put an order in here to sell if there's anything there. Might not be. And there's not. I see sell. Well, that's not too bad, actually. 7 cents credit. And the stock is coming down. So here's the fishing I'm going to do. I'm going to put this order in for 10 cents. Selling. Well, let's actually make this. I got the wrong strike. Yeah, I need to make this one 21 underneath. Let me do that really quickly here. So this one is selling the 22 put and buying the 21 put. I'm seeing no real credit there. It's not normalized yet, so this shows a debit. I'm going to sell some more time, go to March 22, and believe me, I'll review all these trades with you here in a minute. All right, so I'm going to set this as a trap, basically. Selling the AEO March 22 put, buying the underlying put at 21, showing mid price of 2 cents. We're not going to get filled on this unless the stock drops. I'll set this order in, confirm and send. And now I have 2 trades in motion here, and I can check the available prices. All right, so you'll notice here, these prices here are mid prices, or actual live mid prices that are available in the market makers are providing. And these prices, if it shows a debit, they're just playing around with trying to get the option pricing normalized. So these prices will bounce around, and then we may actually get a fill on these. I'm not going to go any higher on AEO than 22. And then I've got the 24 calls here showing 2.5 cents. So let me review this with you. We may or may not get filled on these, but let me review the orders with you so that you can really understand what I've just done here. Okay. Now, first off, let me show you the orders, and I want to talk to you about return on investment as well. So here's the order I just placed. So we sold to open. We're trying to sell to open the VSCO March 16, 24 call. And then we're buying to open the VSCO March 16, 25 call as well. And I'm asking for 10 cents. It's not available yet, but we're going to wait. And we're going to see what Victoria's Secrets does. If it does bounce today, which it very well could, then we'll get filled at 10 cents sometime during the day if Victoria's Secrets bounces enough. So that's the first one that I did. The second, look at this. The credit is showing at 7.5 cents. Let me do this really quickly here. We're not going to get 20. Let me take this down to 10 cents. So what I think is happening with the stock is that it's rising now. 5 cents mid. Let's put it in there, 10 cents. So that's the new Victoria's Secret order is to sell the 24 call, buy the 25 for a 10-cent limit, currently showing 2.5. All right. So here's that order there. Now we're going to go take a look and see what the stock's actually doing on Victoria's Secret. Yeah, it's coming down a bit. Okay, so with that said, I might drop this in a minute. Let's let this play out for just a little bit more. And let me show you the other one that we got on. So the other one, again, fishing, is the AEO March 22 put. Let me show you what that looks like. So we're buying the 21 put. And we're selling the 22 put. Stay with me. I'm just filling out the form here. Okay, so the stock symbol is AEO. All right, so we're selling to open the March 22 puts. Doesn't make a difference. And then we're buying the 21 puts. How about I do it correctly? We're selling the 22s, buying the 21. There we go. I'm on track. This is what I'm trying to get filled on. We're selling the March 22 puts, March 22 puts, and then buying the 21 puts beneath, also trying to get 10 cents on that one. Now, both of them I'm asking for 10 cents. 10 cents isn't very much money. No, it isn't. But the return is very high. So right in the guidebook, you're going to see these calculations. It's a $1 spread, both of them. I'm asking 10 cents on both of them. The max risk then will be 90 cents. And the return on investment potential is 11% on both trades. So are you interested in making just $10? I'm not. So what you want to do is size these trades up to not exceed a particular position limit. So for example, in my case here, I'm using $500 as my max position size, and I don't want to exceed that. So if I did 5 contracts at 90 cents risk a contract, that would be $450. 90 cents times 100, shares controlled, times 5 is $450 of risk. So that is more interesting, right? So you're making $50 on 450 in risk, and that's going to be 10% once you close the trade out, if indeed it becomes a winner. So that's a piece I haven't talked about much here, but it's really important. It's in the guidebook, so be sure to grab the guidebook. It's right down below my face here. Grab it, it's free, and read through it and be with me on Thursdays, because we've been sniping profits with great enthusiasm and great success. We certainly want to keep that success, put that success in your hands. And one last look here, just looking at the current prices. So far, no fills, but I'm not going to move my lines in the sand. We're just going to sit here. We'll either get filled or we're not. We're going to let these trades come to us, the trades that really work well for us. And if you don't give me the price, that's fine. There's always a new trade coming. Every day there's sniper trades. Every single day we have sniper trades. All right, Ryan, I offered the invitation for people to share their stocks. Do we have anybody that's got stocks for us to take a look at this morning?
Not seeing any in the chat right now.
Okay.
But I did ask the question in the chat earlier as well. But not seeing any answers to it. If y'all have any if y'all have any stocks, just let us know.
Yeah, man. Now I can. There's a couple of sites I go to. We could use this 5 minutes that we have here to talk about how you can find some of these candidates. There's a lot of places you can find the candidates. This is not the only one, but barchart.com stocks, pre-market trading, will give you a list of potential candidates. So I've got pre-market gap up here, and there's a few in here that you might want to take a look at. We can maybe see if we like any of these. Now, when I do this, I like to see stocks that are, around $10 in size. Don't see any though there. Here's Victoria's Secret. These are the ones that have gapped down. Victoria's Secret is on this list. Sienna, this could be interesting. Sienna is down 5.82%, which is 9.5%. That was its pre-market dump. So Sienna sounds interesting to me. So what I can do here is go right into a stock chart here, and let's see what the stock's actually doing. And let's see if we can find a line in the sand we can play with here. Interesting. All right. So that's what the stock's done. Now, why did it do it? Yeah, this is a candidate here. The stock has plummeted after some kind of news. So you could go into Yahoo Finance, many other places to find news. I'll type in Sienna. And let's see what the news is on this one. Similar story. This could be interesting. Sienna tops earnings estimate, but their revenue guidance falls short. Okay, this is even more mixed. Victoria's Secret had flat earnings and lowered guidance. Sienna topped their estimate on earnings and lowered their guidance. So it's even more mixed. And when I see that kind of mix, then I typically what happens is what's happening here on Sienna. Again, they lowered their future guidance. It was good this quarter, but next year, not as good. The stock got hammered. It's had this, what's called a hammer pattern so far in the market. I believe what this stock will do, having bounced off the 50-day average, is make a run up. So this is another one. And what I would do on this one is set a line in the sand anywhere above 62.50. These highs here. Let's just see what the what option strikes are available on Sienna. I'll just give you a line in the sand that I like. All right, so there's only 8 days. We could go 43 days. Please don't do 43-day sniper credit spreads. There's too much time for the stock to go against you. 8 days is a really good time frame if you can get some premium for it, but probably not in this case. But we can try, right? And so I can see that the highest strike that I would even play with here is 65. 60 would be too low. Let me show you on the chart here. So I could put my line in the sand there. No, 65 is as close as I would get. So you could, if you like, put an order in to snipe at 65, put your credit in. I would say a minimum credit of 50 cents, which is 10% of a 5-point spread width, 65.70, selling the 65 calls, buying the 70. That's a $5 spread. 70 minus 65 is $5 spread. And for us to make 10%, we need to have the credit be at least 50 cents. So in that case, you would put the order in to sell the 65, buy the 70 for a minimum credit of 50 cents. And you have a fighting shot of getting that should Sienna have a strong run after that very mixed earnings report. And there's plenty. Believe me, these come out every day. You can go to this bar chart place here, pre-market, and start looking for stocks that are moving big up and down. Check the news, get the guidebook, and you can trade these even when I'm not in front of you. So that's a wrap for today. Brandon's, I think, out for the next few weeks, so it'll just be me for the next few weeks. Looking forward to seeing you. Same bet, same time next week, 9:15 Eastern Time every Thursday. Have a great week. We'll see you soon.